In this introduction part, it has a comprehensive overview of the fraud, which is the explanation and example of accounting fraud and term of cook the book. According to Black Law Dictionary, fraud is classified as a knowing mispresentation of a true or concealment of a material fact to induce another to act to his or her detriment. Fraud can, in the broader sense, include crime for profit that use deception as its key mode of operation. Consequently, it also involves other deliberate or intentional act to deprive another through guilt, trick, or other unjust means of depriving another of property or asset. Fraud in a company may not internally be committed by the company staff, executive, officer, or shareholder, or externally by client, supplier, and other parties. Other system rather than organization defraud citizen. Accounting fraud is described as intentionally manipulating financial statements or records. Commonly, companies involved in accounting fraud when they try to make the financial health of their corporation is more beneficial than the actual is. In terms of how accounting fraud happen in companies when they have corruption and cyber attack all play in a prominent role. According to 2040 Global Economic Crime Report, in the last 2 years ago, 45% of US firms has encountered a form of accounting fraud. There are so many ways of accounting fraud happen in an organization, including steps such as inflation of stock price in a company, avoidance of proven commitment of debt, achieving a lot of advantageous financing, among others. Legally, any accountant and worker who are forced or requested by their employer to perform in accounting fraud may be charged with personal criminal charges. Those carrying out the fraud in accounting are not just workers, but it may involve corporation and company account in order to deceive shareholder, governments, investors, among other institutions. Has accounting fraud done the same as cook the book? Cook the book is used to identify the fraudulent activity carried out by corporations to falsify their financial statement, and therefore as a means of deliberately misrepresenting the company's financial account to prevent tax payment or to hide the fact so that the company's situation appears to be better than the actual situation. To some extent, manipulation is performed by every company to balance the budget and guarantee the survival of the company funding for investors. However, it turns into corporate fraud when this manipulation exceeds a certain level where the company's executive cross the line. If someone does cook the book, then he or she could face severe consequences. The example of cook the book is to make a lump sum payment reservation that the organization can be exploited by documenting the lump sum payment received by it in the financial year in which it collects the service that it also to be given in the coming financial year. The next example is of the balance sheet item by which the company can manipulate financial statements such as separate subsidiaries generated by the company to incur those expenses that the parent company is unable to show in the financial statement, and it can disclose it in the account book of the subsidiary company thus established.
The issue at hand involves TESCO overstating their profit by £250 million. This arose due to both internal management pressure and external pressure from retail industry. In 2014, TESCO market share reduced by 3%. This factor, along with management pushing for higher profit, increased the incentive for perpetrators to commit fraud. What went wrong? As key personnel realized that sales target weren't going to be met, hidden agreements were made with supplier. This agreement offers supplier benefits such as in-store promotions and bonus payment if TESCO hit sales target. The payment that TESCO received from supplier purposely recognized in the wrong accounting period. In some cases, TESCO even ended paying back the supplier in subsequent period. These false recognitions of future revenue means that commercial income seems steady despite sales declining. It was later TESCO had been withholding money due to the supply in order to boost performance. They were also thought to have been manipulating business costs. At the time of scandal, PwC were acting as TESCO external auditor, although their involvement has been questioned. A PwC representative on the audit committee at the time said they did warn TESCO of a risk of manipulation. Whistleblower. The overstatement had discovered by one of TESCO accountant, Amit Soni. He initially brought the issue to the attentions of Finance Director Carl Rochberg but failed to get traction due to Rochberg being involved in the fraud himself. He was forced to escalate the information to TESCO lawyer. The seriousness of allegation meant that was immediately brought to the attentions of Dave Lewis, TESCO new CEO at the time. As the result of this, he launched a full investigation into the scandal. On 22 seconds of September 2014, the launch of investigation was made public. As the result, TESCO share dropped to 11.3%, the lowest they had been in 11 years. The announcement also impacted TESCO credit rating. The perpetrator. During the investigation, four directors were Carl Rochberg, Finance Director, Chris Bush, UK Managing Director, Matt Simpster, Group Food Sourcing Director, and John Scholar, UK Commercial Director. Matt Simpster has since returned to work at TESCO. However, his three colleagues are currently being tried for fraud by false accounting and abusive positions, and all deny the charge.
For audit, if the auditor want to analyze the fraud within the organization, auditor usually will refer to fraud triangle to make it to work. What is fraud triangle? Fraud triangle is a framework that designed to explain the reason behind a worker or individual decision to commit a fraud. There are three elements in fraud triangle, which is pressure or incentive, opportunity, and rationalization. In case of TESCO UK scandal, there are four pressures, which is first, competitive industrial. The supermarket industry usually bring huge profit opportunity that attract new company to join this industry. Due to that matter, TESCO faced increased competition from aggressive low-cost competitors such as Aldi and Lidl and Sunbury. What made the situation become awful, TESCO made the mistake of investing in the large store, whereas at that time the online shopping was very famous. The second pressure is decrease on market share. The market share of TESCO also dropped and lost their customer against the discounter from Aldi and Lidl, make TESCO value become decreased. The financial year of 2013 and 14, the market share of TESCO was the lowest level in UK history in decade, falling to 28.7%. The third pressure is direction from top management. The mastermind who made the TESCO scandal is there three of TESCO senior executives, which is Chris Bush, Carl Rochberg, and John Scholar. The three of them also are accused of falsifying accounting record, hiding information from the auditor, and forcing the junior employee to falsify figures. As a higher position in their company, what they should do is protect their company financial health and their employee. However, what they do is put pressure, bully, and force those who is under them to falsifying amount when it should not be. The last pressure is investor pressure. The investor in TESCO demand improved performance regardless of possible long-term damage to the business or customer relationship. Because of that, their senior executives are focused to investors that they try to avoiding and ignore on the customer relationship and long-term business need and direction. The second element in fraud triangle is opportunity. The opportunity is the ability to commit the fraud in the organization. It shows in what circumstances that allow fraud to occur. First TESCO UK scandal opportunity is familiarity with external auditor. PwC was the one who conduct audit for TESCO since 1983. Since PwC already worked with TESCO for a long time, many problems might occur like lacking professional skepticism. During the end of the year 2013 and 14 in audit year, PwC vice issue how the revenue come from the promotion offer from supplier. Although this is the third time they have raised the issue with TESCO. However, TESCO auditor consider that is not a problem. In addition, Ken Hanna, who is the TESCO auditor chairman, previously was trained as an auditor at Cooper and Lybrand. In 1998, Cooper and Lybrand joined forces with PwC. Also, non-executive director, which is Mark Elmer, is former PwC partner. TESCO should not work together with PwC anymore because it can raise conflict of interest. As the result, Hannah and Emma ignored the warning about the risk of commercial revenue being manipulated. If TESCO takes serious with this issue, they may avoid or minimize the misstatement. The second opportunity is deficiencies in internal control. TESCO suppliers have also reported that TESCO have trouble internal administration and communication. The team of investigators discovered that TESCO had lacking process and system to correct data error. The last opportunity is lack of industry experience. Many criticisms thrown by the company board regarding the lack of knowledge and experience that should be available for the director who has been on TESCO director. TESCO requirement policy for director clearly there are no requirements that say there must be foundation or experience in the particular sector. If there are problems, the director did not know what the best solution to handle the problem because they lack experience in supermarket sector. The last element in fraud triangle is rationalization, which is the justification why the person commit the fraud. There are three rationalization in TESCO UK scandal. First is act in the best interest. When we talk about the fraudulent activity, the common reason that always come out is the person act in the best interest. In investigation of serious fraud office, the defendant will realize that the fraudulent activity is conducted smoothly. Robert keep the important information from PwC auditor, the one who they audit TESCO account, who have been misled and lied to and insert the wrong amount in the company computerized accounting system. PwC also state that Bush has confirmed that the amount was false, while scholars know that the income was wrong and pulled forward from the future year to make a hole in the account. They all know that what they do is wrong, but because of their interest to make a change in the company account, they still do that. The second realization is loyalty. Former TESCO UK managing director as well as one of the defendants, which is Christopher Bush, is very famous as the employee that devoted doing his job. He is such a workaholic that hard to believe by anyone that he will conduct the fraudulent to make drop TESCO reputation. Because of his loyalty to his company, he think that he need to do this kind of fraud to protect TESCO. The lawyer that represented Bush in the court said that Bush is still attend the meeting at 7 a.m. even though he is in hospital because of food poisoning. The last rationalization is afraid of superior or top management. The three senior TESCO executives using their management power to force those who working under them to falsify the figure. As an employee, they have no other option just to follow their top management instruction even though they know the action is wrong. Because of that, Some of the employees feel their professional integrity has been upheld and they decide to resign from their career job at TESCO rather than continue to involve in the fraud.
There are many effects and penalties imposed of TESCO United Kingdom scandal. After the TESCO case issued in September 2014, a statement to the stock exchange in which acknowledged that it has indicated a profit increase in earlier 6 months of £250 million in year 2014. After being guilty, TESCO was penalised £129 million by the Serious Fraud Office (SFO) for extracting gain with the wrong ways. Lastly, at the end, TESCO has to pay fine over £129 million concerned with the Serious Fraud Office. The announcement from BBC News and Business on 23 October 2014, TESCO share instantly decreased because many investors feel negative towards TESCO, and the share closed that day 6.5% down. Many investors sued company TESCO as a consequence and accusing them of losing millions as they buy shares based on confusing accounts. In 11 years, shares in TESCO have plummeted to the low initial announcement of mere representation. The effect of TESCO stock decrease in value is important to the large number of people in the United Kingdom because there was a share the large number of pension funds and the other fund investors in TESCO. TESCO already concerned with FCA to investigate of market abuse of gain amount in account from 2014. Then, the Financial Conduct Authority tells the TESCO company to pay £85 million, excluding interest to investors who miss opportunity to buy a higher price than they should be in the month period August and September in year 2014. On November 2014, Stewart Law from United Kingdom law firm announcement was request TESCO shareholder to take action in a lawsuit against the TESCO after the accounting scandal that had eliminated £billion from the TESCO stock market value. TESCO Supermarket fully collaborated with the research about 2 years and has undergone extensive program of change, including major change in management, how the business is running, the purchase are sold, accounting department and business with supplier to restore customer trust back. At the end, 8 highest executives already suspended and all highest management team TESCO already replaced with a new one employee. After the investigation, 1 was returned back to the company, 4 executives is already suspended and 3 removed from the company. TESCO already made a statement to the company will reduce employees to 10,000 jobs with the amount 6,000 employees from its head office.
As the conclusion statement, we recommended that appropriate regulation and effective accounting practice should be included in the business to prevent fraud. Likewise, effective governance practice and leadership need to be integrated into the corporate governance company to maintain worker on track to achieve organization strategy when valuing and fulfilling stakeholders' interests and legal rights. If TESCO Board of Directors and corporate structure might have respect the principle and interest of the stakeholder while leaving the company's personal profit aside, the company would not have indulged in such extreme accounting fraud. It can also be recommended that with the incorporation of the rule of the governance code and potential board member, the organization should have an appropriate corporate governance system in order to prevent such fraud and scandal. Based on this case study, it is shown that appropriate internal control are a good precautionary measure than productive auditing. However, if the individual who are part of the system themselves try to circumvent the control mechanism, it is almost impossible to stop fraud like TESCO, regardless of what control are put into place or whatever standard for accounting and reporting are set.